Welcome back to another episode of Stock Talk. If you guys are new to my channel, welcome. My name is Julie. In today's video, I'm really excited about the stock I'm going to be talking about because I just had an exciting announcement this morning. That is, if you are a dividend investor. And the company I'm referring to is Rocket Companies. You might have heard of them in the past. They are actually a Detroit-based fintech platform company and consist of personal finance and consumer technology brands, which include Rocket Mortgage, Rocket Homes, Amrock, Rocket Auto, Rocket Loans, Truebill, Lendesk, Edison Financial, Core Digital Media, and Rocket Central and Rocket Connections. The company was established in 1985 and has been obsessed with helping its clients achieve the American dream of homeownership and financial freedom. The company offers industry-leading client experiences powered by its simple and fast and trusted digital solutions. The company has roughly 26,000 team members across the United States and Canada, and the company was ranked number 5 on the Fortune's list of the 100 best companies to work for in 2021, and has been placed in the top third of the list for 18 consecutive years. Rocket Companies came out with their quarterly earnings this morning, and they reported 32 cents per share, missing the Zacks consensus estimate of 38 cents. And the company compares its earnings to $1.14 per share a year ago. This quarterly report represents an earnings surprise of negative almost 16%, which a year ago it was expected that the company would post earnings of 48 cents per share when it actually produced earnings of 57 cents per share, which delivered a surprise of almost 19%. So it had an overall negative earnings report. Additionally, they posted revenue of $2.59 billion for the quarter ending in December 2021, which missed the Zacks consensus estimate by 2.74%. So a year ago, their revenue was $4.7 billion. Now, the company has topped this consensus revenue estimates 2 times over the last 4 quarters, but as we can see, this past quarter was not in their favor. But let's go ahead and take a look at the overall picture. So in the quarter of 2021, they generated a total revenue of $2.6 billion and had an adjusted revenue of $2.4 billion, which represents 36 and 33% growth as compared to Q4 of 19. Now, they are comparing it to 2019 as we had a historical low interest rate environment with a combination of limited industry capacity during 2020. They also generated $75.9 billion in mortgage origination closed loan volume and had a gain on sale margin of 2.8%. Their closed loan volume was up 49% compared to Q4 of 2019. They also generated a net income of $865 million, which exceeded Q4 2019's net income by 15%, and adjusted net income of $637 million during Q4 of 2021, which was up 23% compared to Q4 of 2019. Their net income margin was 33% in Q4 of 21, which compares to 40% in Q4 of 2019. And their net income margin was 26% in Q4 of 21, which compares to 28% in Q4 of 2019. They achieved adjusted EBITDA of $883 million of Q4 of 21, which is up 19% from Q4 in 2019. And their adjusted EBITDA margin was 36% in Q4 21, which compares to 41% of Q4 in 2019. So overall, they had a nice improvement. And looking at their balance sheet and liquidity, we can see they had a strong liquidity position with a total of $9.1 billion, which includes $2.1 billion of cash on hand, $3.5 billion of corporate cash used to self-fund loan originations, a portion of which could be transferred to funding facilities like warehouse lines at their discretion, and $3.1 billion of undrawn lines of credit line from non-funding facilities, and $0.3 billion of undrawn MSR lines. Their available cash position was $5.6 billion, which includes cash on hand and corporate cash and used to self-fund loan originations, combined with $5.4 billion of mortgage servicing rights, representing a total of $11 billion of asset value on their balance sheet in December of 2021. So the reason I'm really excited about Rocket Mortgage is they just announced that they are going to be paying a special dividend of $1.01 per share. And this is the second time now that they're paying a special dividend since they went public in August of 2020, which since their IPO, they have returned $4.5 billion to their shareholders through that special dividend. This is a special dividend that they're paying, so it's not guaranteed that they are going to be paying this dividend again. But considering this is the second time around they're paying a special dividend, I could see these special dividends occur year after year. With a price point of $12, this represents a dividend yield of over 9%. So you can see the first time they paid the special dividend was back in March 7th of 2021. And speaking of which, they are paying the special dividend on March 8th this year, but you do have to be a shareholder of Rocket Companies by the ex-dividend, which is March 7th. And then you receive the dividend payout on March 22nd. Additionally, they just concluded their share repurchase program of 20.7 million on February 18th with an average purchase price of $15.08, which combined they have returned 312 million to Class A common share stockholders under the 1 billion share repurchase program authorized back in November 2020. So the stock is currently trading around $12, and to me this is a fantastic entry point. Now I do want to point out that typically after dividends get paid out, you'll see a decline in the stock price, but what I do at that point, I go ahead and actually add more shares to my position. Now, I personally currently hold roughly 222 shares of Rocket Company, and with such a high yield, I'm super excited to be able to pick up some more shares at this price. Now, if we take a look at the analyst forecast, we can see that we have a majority of hold rating, and we have a median price target of around $14.65, so it leaves us roughly with a 22% upside potential. But if you are able to pick up 100 shares of Rocket Mortgage right now, you can, in addition to collecting the dividend, also sell covered calls against your shares. And actually, Rocket Mortgage offers you weekly options, so you could sell covered calls on a weekly basis if you like to do so. And for instance, of course, I would wait for the dividend date to come closer because typically we'll see an increase in the price of the stock. And at that point, I would go ahead and sell a covered call against my shares. And you can see just right now, based on these numbers, if we were to go out to, let's say March 18th, and we sell a covered call for the $13 strike, then you would actually collect $33 per each 100 shares that you own. So that is just my strategy on how I would generate additional income besides the dividend that Rocket Companies pays you. Additionally, if you guys don't know, Rocket Companies acquired Webull just this past December of 2021, and Webull has a user base of 2.5 million members. Webull helps consumers manage subscriptions, improve their credit scores, tracking spending, and building budgets through a simple but user-friendly app. And with their revenue and user base, they had actually doubled in 2021 versus 2020. So I think Rocket Companies is moving in the right direction, and I can see this company growing in the next 5 to 10 years. So I'm really excited to be able to pick up some more shares of Rocket Companies. So let me know in the comments below if you guys are considering picking up some shares of Rocket Companies, or perhaps if you already own the company, or if you don't, and why you don't. And as always, this is not financial advice, so please be sure that you do your own research. And if you got anything out of this video, be sure to hit that like button and consider subscribing to my channel. And I'll see you guys in my next video. Until then, bye-bye.